A string of US data was released today. Joining me on the line is Clarke, economist at Investec, to discuss these data releases in more detail. US Consumer Price Index figures released today showed CPI down to 1.1% year-on-year for April and also down to 1.7% excluding food and energy. What do you make of the US Consumer Price data released today?
Well, we've seen another moderation, a fairly sharp one. As you say, CPI inflation is down to its lowest level since November 2010 on the headline measure. And that's pretty consistent with the moderation that we've seen in the other price measures, producer index prices, and also PCE, which is the Fed's favoured measure, the measure that the Fed targets. And I think the most interesting thing from the moderation that we're seeing across these measures, but particularly the Fed's favoured measure, is that they are really edging quite far below now the Fed's 2% target. So in terms of the debate about Fed policy, well, that gives them plenty of space to keep going with QE3, but it might actually mean that we see an increasing debate about whether they need to up the level of QE3 purchases rather than bring them down, as has been the debate over the recent months.
US housing starts data was down to 853k from 1,021k. Do you think the contribution it has had to economic growth is short-lived?
Well, it's not a great headline, but I think it's too soon to get carried away with today's outturn. And effectively, what we've got is a bit of a reversal from some of the big gains which have been outrunning the permits. In terms of what it means for the economy, well, we think that we'll continue to see the housing recovery powering on through this year, probably not at the same pace, but still at a pace where it would give significant support for construction overall, for consumer spending, and increasingly as house prices come up, that should help the housing recovery to motor even more. So this should all be pretty positive if this is a blip and if that trend does continue as we think it will.
And US initial jobless claims were up from 328k to 360k. What does this mean for the US economy?
It is not pleasing, but the numbers are pretty volatile, and particularly around now because we've had various distortions such as from the Easter break and the seasonal factors that are all over the place. I would throw this in with the bag of mixed data which we've had on the job sector anyway, so payroll growth's been pretty mixed. Hiring surveys have actually been pretty subdued. And in terms of where that takes us for the US jobs market, and as you say, for sort of Congress, I think we're going to see continued jobs recovery, but more subdued through the second quarter. One of the things we look at is small business hiring, that the backbone of the US economy, of US employment. So until small business hiring picks up, we won't see a much stronger jobs recovery. So it does point towards the jobs recovery continuing at a fairly gradual pace and then picking up not until the end of the year.
And lastly, the US Philadelphia Fed survey came out today. What does this survey say about US manufacturing production?
Well, it's in a bit of a soft patch. Manufacturing output rolled over in March and April, and according to this survey and the Empire State, which we've had earlier in the week, it remains pretty soft, and we see some of that slowdown being driven by external factors, but probably more domestic factors, because firms have built up such high inventories, they now need to run those down a little bit, so the firms aren't producing so much. Having said that, we don't see this as a sustained weakness for the manufacturing sector, so some of the effect may be a knock-on from the sequester, and some may just be a little bit from the inventory flow. So once those two factors feed out, we would actually see manufacturing shaping up a little bit more. But again, a fairly soft Q2. Manufacturing is not going to be a big positive for the US economy in Q2, and we think that means that US output for GDP overall will be fairly soft compared to Q1 also.
That's all for now, but do check out my Commodities Corner interview tomorrow, which looks at gold. Goodbye for now.